What's up, guys? Welcome back to DCA. So what we're going to do today is take a look at what is, in my opinion, one of the most interesting Bitcoin metrics that exists. This metric has actually identified the market cycle bottom for every single market cycle dating all the way back to 2011. So we're going to look at a metric today called the entity adjusted dormancy flow. Now, we actually made a video on this metric back on January 4th. And in that video, what we said was that it's very likely that there is not a bull market ahead of us from here, that there's very likely going to be additional downside movement in the market based on what we're seeing with this metric, because this metric is very good at identifying the overall health of the market. And I'm going to show you why that is today. So before we do that, we're going to have to build up some knowledge about two smaller components of this metric that go into it. So we're going to do that today. We're going to look at where we're at right now and what it's telling us, with, just keeping in mind that this metric has shown us the market cycle bottoms in the past. So we're going to discuss whether that's still going to be true in this market cycle. We're going to discuss what it's done in the past and why it shows us the market cycle bottom. And we're going to take a look at where the market is at right now as we're trading at $28,700. Okay, in order to understand entity adjusted dormancy flow, we first need to understand a metric called coin days destroyed. So in this explanation, we need to look at a hypothetical market scenario. So we're going to look at four investors. We're going to look at individuals that are selling Bitcoin today in this hypothetical scenario. So we have Nick, Len, George, and Carl. Okay, so we'll start by thinking about these four investors. And we have Nick. So Nick has 0.25 Bitcoin. You can see that Len is selling 0.5 Bitcoin. George is selling 10 Bitcoin. And Carl, well, he doesn't actually have Bitcoin because he only invests in shitcoins. Okay, so Nick, he's not a very good investor at all. He has a quarter of a Bitcoin, and he's only held it for 100 days, meaning that he bought way up at the top. So this is the kind of guy telling everyone that we're still in a bull market, as the price is crashing down. He's that kind of guy. This guy is getting himself and other people wrecked constantly. So what a coin day destroyed is then, when he takes that 0.25 Bitcoin, it has accrued 100 days because he bought that 0.25 Bitcoin 100 days ago. So when he sells it, you'll multiply 100 times 0.25. So that's going to be 25 coin days destroyed. Now, Len, he doesn't like his name being used. So he gets mad every time someone does that. And just keep in mind, these are all made up characters. These definitely don't represent anyone you know. All right, so Len, he's a much better investor than Nick is. Okay, so Len actually only has 0.5 Bitcoin because he's smart. Len's a smart guy. He actually makes so much money off of other people that he doesn't even need to invest in Bitcoin anymore. What's the point when there's so much volatility? When, people are just giving you their money every single month. So Len has 0.5 Bitcoin, and he's going to sell those Bitcoin that he has, that he's been sitting on for 400 days. Okay, so he's a bit more patient than Nick is. So those 400-day-old Bitcoin, he takes them and he sells them. So it's 400 times 0.5 to give you 200 coin days destroyed now. Now, George, on the other hand, George is also a terrible investor, but he's a great guy. George is a pretty cool guy. So he's the kind of guy, though, that tells everyone buy every single dip. He says, buy the dip, buy the dip, buy the dip. So he's been buying tons of Bitcoin, and he's old school. He's been in the game for a long time. So, he's made lots of money just by default, just by being in Bitcoin for so long. So he was able to get 10 Bitcoin. But he kept buying, and he bought the top. He bought every single time we dipped. And now he's capitulating because we're way down here and he thinks we're heading into a bear market. So he's taking his 10 Bitcoin that he has for an average of 200 days. And when he sells them, that will have accrued 2,000 coin days destroyed. So it's 200 times the 10 Bitcoin. Okay. So what we need to do then is add those up. And that total will be the total number of coin days destroyed. Now, what we also want to do is then add up the number of coins that were destroyed. And then we finally have Carl. Okay. Carl is only invested in shitcoins. So, he doesn't own any Bitcoin. His account is worth nothing, but, people think that he makes a lot of money in Bitcoin, but he doesn't. All right. So what we do is we take the sum of those coin days that were destroyed. In this case, it's going to be 2,225. And then we also need to know the number of Bitcoin that there were. Okay, so 10.75 Bitcoin in this case. All right, so this is the coin days destroyed, and then we need to keep in mind this number of coins. And the reason for that is this final metric that we're going to look at is called dormancy. Dormancy is the number of coin days destroyed divided by the number of coins. So this basically tells us, on average, how many coin days were being destroyed. So the reason that dormancy matters is because imagine if you have 10 investors with, 1 Bitcoin each, and they've only held for a week. When they sell, that accrues 70 coin days. So we see 70 coin days being destroyed at that time. Now imagine an alternative scenario. Imagine someone who's been holding 10 Bitcoin, that same 10 Bitcoin, for 1,000 days. So they've had it for, throughout the entire market cycle. That's going to be 7,000 coin days destroyed. So that is a metric which can show us who is selling. Is it long-term holders or is it short-term holders? Because there are very defined characteristics. Long-term holders tend to sell as we are moving from a place where we're, in a bearish segment of the market, because they're typically acquiring at those times of the market and they're selling as the price is rising. Whereas oftentimes short-term holders are the ones capitulating in these bearish segments of the market when the price is going down. And that matters because we ultimately want to know if there's something changing in the market dynamic. Are the long-term holders losing faith in the asset? Okay. Because if you're not seeing long-term holders buying in a bearish segment of the market, that's ultimately going to be significant and concerning. Okay. So when we look at that, then what we do is we take that number of coin days destroyed, divide it by the number of coins. And you can see in this example, it's 207 days. Okay. So on average, there were 207 days destroyed by each coin sold. All right. So this is an excellent measure of the activity of our longer term holders, as we described. Okay. So that's going to be our dormancy then. So we have coin days destroyed. And when we divide that by the number of coins, we then arrive at our dormancy. And with that, now we can come up with an additional metric. And this will be the metric we're going to talk about today. This is going to be the entity adjusted dormancy flow. And ultimately, this is going to be the metric which has identified the market cycle bottoms in each market cycle so far. And we're going to talk about why that is. Okay, so this is the entity adjusted dormancy flow. And you can see that it's market cap divided by the annualized price times the dormancy. So what does that mean exactly? Well, this is basically showing us when the market cap is very high relative to the value of the coin days being destroyed, the annual value of the coin days being destroyed. So when it's very high, this is a bullish sign for the market because it means there's still a lot of room for the market to go. Now, when the value of coins, the annual value of coins being destroyed starts to increase as it becomes higher and higher and higher, then this number is going to come down. Okay, so the market is essentially exhausted. We're in a full capitulation state. And you can see that at every single point at the bottom of this chart, every single point here, when we've reached into this zone here, when we've reached down into this zone, that has kind of been a point where the market has hit bottom. So here in 2011, here in 2015, and then back in November, December of 2018. And you can see that right now we've actually entered that zone again. Okay. Actually, for the first time in this market cycle. So these are times when the market has essentially entered into a full capitulation state. So you can imagine that as the market is very bullish, as the market cap is increasing, all right, as it's increasing, and then your annualized value of coins being destroyed, or dormancy times price, that value is much lower. And so this begins to rise. And then when you see it start to fall, that means you're entering into a capitulation state. And as it's becoming lower and lower, that means the market cap, the value of the market cap is significantly decreased with relation to the coins being destroyed, because there's essentially market capitulation going on. And when we reach into these lowest levels, that typically tends to be peak capitulation. All right. So that brings us to the point. We know that we're in this zone here. We're in this zone finally. What does that mean for Bitcoin and where we're at right now? Okay. So first off, you have to keep in mind that when we've been down into this zone, here, these have been under a certain set of market circumstances. Okay. And when I say market, I'm not talking about the Bitcoin market. I'm talking about just the economy in general. So this metric has identified the behavior of Bitcoin under a particular set of market circumstances. Now we are in a stage of the economy where for the first time, we could potentially see a true recession start as we're going down farther and farther. So ultimately, this metric and whether this predicts the bottom is going to be heavily dependent on what happens with the economy. Because if the economy is able to maintain itself, let's say that we do get an economic slowdown, but the market is ultimately able to start to pick up by the end of 2022, let's say, then I think that this metric will yet again very likely identify the bottom for us. And notice that just because we're in this zone right now, that doesn't mean that we can't go lower, because you can look back here at 2011. This zone that we're in has quite a bit of range in it. So it doesn't mean that we're necessarily right at the bottom if the market were to sort of turn around from here, because we could still go down farther from where we're at the moment. But it is in general a very good indication that you've reached a, near a maximum level of capitulation. Now, there can always be more capitulation. There are no hard limits on where the price has to stop at. But like I said, this is how investors have reacted to these scenarios given a certain set of market circumstances. If the market circumstances significantly change and it looks like there's potential that they could, we could ultimately drop below this level. Now, if we did, that would be a new dynamic shift in the market. And then, we're sort of in uncharted territory. It's price discovery mode. But right now, if the economy is able to sort of just slow down, but we ultimately don't go into a full out recessionary period, you could potentially see that this, in fact, is around where the bottom is. Now, based on percentages, we could stay within this zone and probably be down as low as $20,000 and still be well within this zone, or maybe even a bit lower than that. But it's not so much that we're trying to identify a specific price here. It's that we're trying to identify a specific region, a region of the market sentiment, a region of the investor behavior. And it looks as though we are now in that lower region. But again, we're going to have to watch what the economy does. So this shows us the hodler net position change. And you can see that what we're looking at here is essentially how are investors reacting to the situation right now. And specifically, we don't care about short-term holders. They ultimately don't matter very much for the long-term picture of Bitcoin. Short-term holders are weak hands, newer investors, inexperienced investors, and traders. They don't matter so much to the long-term picture of Bitcoin. Who matters is the long-term holders. And what we can see is that the long-term holders, in spite of the fact that a lot of people are very fearful based on everything that we've seen with the price movement, based on the fact that the economy is looking weak, you're still seeing that long-term holders are continuing to acquire. They're continuing to acquire in each stage of the market. You can see that here's the relative position change, and here is where kind of we're sitting. Now, it's not as big as it was back in, August and September and October. It's not as big as it was, necessarily right here, but the length of time is significant. People have been acquiring basically since the beginning of March. They've been acquiring. So all through March, all through April, and now well into May, individuals are acquiring the asset. And as we had this large capitulation here, we saw long-term holders with conviction step in and acquire the asset. And ultimately, that is a show of strength for the market. It's a show that they are willing to step in and buy the asset, and they won't be deterred by the fact that the price has dropped, because ultimately they believe in the long-term vision of the asset. So we could still go lower in price, and we could go significantly lower. But things like this are, positive to see, in that it indicates to us that they haven't lost conviction. Long-term holders, more savvy investors haven't lost conviction in the asset. Things like this don't tend to be very, indicative of what's going to happen in the short term. So nothing I'm saying right now is saying the market's going to turn around, this month. But what a metric like this shows us is a long-term prognostic factor for the asset. What we see is that longer-term holders are continuing to acquire the asset. They're continuing to believe in the asset. Even if the price goes lower from here, they believe in the long-term picture of Bitcoin. And ultimately, I do too. That's why I continue to, dollar cost average, dynamically dollar cost average according to the DCA index risk model, like I always do. And I'll continue to do so until, if I stop that for any reason, I'll let you guys know. But as of now, I continue to dollar cost average. It reduces my volatility, and I believe that this asset will return to much higher prices in the long run. But I'm well aware of the fact that the market could continue down from where we're at right now. And, you have to be mentally prepared to be at a loss for a given amount of time. And it could be quite a long time. If you were buying in 2018, you were at a loss, very likely, for all of 2018, all of 2019, much of 2020. And then finally, until 2021, you were sitting at a loss. But if you had conviction, you were well rewarded for it. So that's going to be it for this one, guys. Until next time, as usual, see ya.